we're going to remind you of something very important. Are you listening? Everybody listening? Market declines are not only common, they are necessary, and they can be healthy. Per the aforementioned Charlie Bolello of Creative Planning, this is currently, Morgan, just the 17th worst decline in 15 years. In other words, I'm not a math major, but that means there are 16 periods in the last few years where stocks have fallen more than this. I think the question, maybe the only question that matters, is are we near the bottom, as Rick just said, or can it get much worse from here? Because things have to start somewhere. Let's talk about it with Clockwise Capital partner James Chalkmock and Moor Insights and Strategy CEO Patrick Moorhead. Patrick, start with you. All 20% declines start with a 5% decline, if you know what I mean. What do you think this is?
Listen, I think the upswing we're seeing today is just a smokescreen. I think that the volatility in market, whether you're looking at consumer confidence, whether you're looking at, I'll call it tariff ping pong, is going to keep pushing uncertainty. Imagine if you are the CEO or CFO of a tech company, what do you forecast, right? And a lot of those forecasts have to do with the entire ecosystem of goods crossing lines between Mexico, US, and China. Where do you even decide to build your goods?
James, what do you think about this market decline?
Yeah, I mean, I think we're at a period of peak uncertainty right now. I mean, you have to question the technology cycle. What is the sustainable growth rate of these companies, particularly in semiconductor industry? You have the short term with tariffs and interest rates. What's going to happen there? Question marks, oscillating between 2 or 3 rate cuts this year. And then the long term, you have the geopolitical as well. So I think it's a 50-50 market at this point, and you've got to play it as such.
So, Patrick Moorhead, Broadcom earnings, better than expected, strong results really across the board, AI in particular, accelerating in terms of growth here. Is the AI trade still alive and well, or is it a situation where instead of it being so broad-based, you need to start looking for winners and losers specifically, and if so, what are they?
Yeah, I really think it's the latter. And let's talk about Broadcom, right? What Broadcom did that NVIDIA and AMD didn't do is they gave a very rosy forecast that was beyond what anybody else would think. CEO Hock Tan talked about 2 new incremental hyperscaler wins that weren't based in their forecast. And on the contrary, we didn't see that from AMD and we didn't see that from NVIDIA. So unless you're knocking the skin off the ball, I think a beat is a meet and a meet is a miss in this type of environment. Macro long term, we do need to look downstream to the AI trade, the enterprise SaaS companies. Are they crushing it? Well, if we looked at Salesforce, what they did in the last quarter, we're looking at single digit, I believe, 9% growth, and that is not crushing it downstream. We have to look to the ServiceNows, the SAPs for that long-term view. But I think it's situational at this point, just not a dive in and hit every ticker that's related to the AI trade.